Hello and welcome. My name is Camilla Cox. I'm a Senior Corporate Affairs Advisor here at Wilson Asset Management. Today, the small cap team have joined me. Will and Sam, welcome. Let's chat through a couple of stocks that you're focusing on at the moment. We'll start with you, Will. Emerald Resources, they recently had the Bullseye takeover. Are you bullish?
Emerald Resources, we're really bullish. Morgan has, bought this Bullseye, finally. It's taken a lot of time. Morgan's the CEO. But there was a few different intricacies within that, and it was complex. However, now it simplifies the story. They're going to have a second asset in Australia within probably 18 months, while also their producing asset in Cambodia, which is a low-cost producer at $900 per ounce when the gold price currently trading at $2,400 US at the moment, so it's a great margin. They're going to use that cash flow to fund all their growth. So we think they could be a 400,000 ounce producer within a couple of years, and on that basis, it's cheap.
Sam, Nick Scali just raised some capital to fund their expansion into the UK. What is your outlook on them now?
Yeah, Nick Scali is the renowned furniture retailer that we all know, operating in Australia and New Zealand. It's founded, owned and operated by the Scali family, and they've been super successful in Australia. Ever since listing at sort of $1 a share, and now trading at $15 a share. They have recently announced their acquisition into the UK. Alongside their first capital raising as the company listed on the share market. We believe this could be an absolute cracker for the business. If you look at the playbook that effectively what they did with the Plush acquisition recently, where they're able to turn that business around, strip costs out and really improve the operating performance of those stores, then we think there's an opportunity to do the exact same in the UK. What's their edge? Nick Scali is effectively buying the best product at the best price and is ruthless on costs. So if they play that same playbook out in the UK into a much bigger market, we see a lot of opportunity there. It's trading at 15 times PE. Offshore players, offshore retailers trade at sort of 25, 26 times PE. The catalyst for us to potentially close that gap is just execution in the UK.
Great. Will, Judo is a small Aussie bank. They're trying to challenge the big four. What do you reckon about them?
Judo can be a complex story, but to keep it simple, they are just challenging the big bank. They're exposed to loaning to the small and medium enterprises within Australia, which are actually high quality businesses. And their business bankers are really focusing on working with the managers and CEOs on helping them expand for growth. We think they've got an edge on the Big Four because the Big Four don't really care about that. The Big Four are too worried about risk and making sure that they're not going to lose money, whereas Judo are focused on losing money, but they're also trying to help these businesses grow. And for that, they charge an extra margin and a higher margin. We think that there's going to be some volatility in their NIMs, which is the net interest margin, over the next couple of quarters. However, as you get to the back half of FY25, it's going to look really good, and we think that investors will start to see the earnings potential, quite soon. So yeah, we're bullish.
Sam, Supply Network, they're basically just keeping trucks on the road. Why do you like them?
That's a great summary. So Supply Networks is an aftermarket provider of parts and services to the commercial vehicle market. As you said, they literally just keep trucks on the road. We really like them. So this was, again, founded and owned by Chairman Harry Forsyth back in the late 1980s. And it's just been this beautiful compounder where they're actually generating the highest organic growth in the market, the best margins and the best return profile versus all the other peers. Now, what's their edge? They deeply understand the customer. So, this customer isn't necessarily price sensitive. They don't want a nickel and dime on a penny here and there. They care about making sure that truck is still on the road, delivering the essential services for Coles and Woolies and the like, day in, day out. So in order to do that, they understand that delivering best service and the best availability of stock is key. We believe this undervalued and under-researched company is similar to like the strong compounders in the US like O'Reilly and also ARB here listed domestically. Those companies trade on 25 to 30 times earnings. We believe that a similar multiple can be attained for S&L over time. And the catalyst is continued execution and earnings upgrades.
Will, next on the list, LGI, landfill gas. Do you like these guys?
Yeah, we're really bullish LGI. We've been an investor in it since the IPO. And the things that sort of have changed most recently probably make us most bullish. So to keep it simple, they essentially just abate gas and turn it into energy. And councils want them to do this because it lowers their carbon emissions. And then they are able to make use of, make money off the energy prices, and they can earn ACCUs, which is carbon credits, and they can also sell into the energy market. Where the real upside is, which we're most recently excited about, is the ability to put batteries around every landfill, which means they can make the most of the price volatility. So they're going to be selling energy into the market at a higher price, and that should result in higher earnings. It's going to take some time. It's going to be 3 or 4 years, but what this business looks like in 3 or 4 years could be pretty substantial.
Great. And Sam, Paragon Care have recently announced that merger with CH2.
Yep.
What do you think the outlook is there?
Yeah, great question. So Paragon Care is actually a distributor for medical devices, and it's announced the merger with CH2, which is a wholesale pharmaceutical distributor, which effectively makes sure that all of our medicines is in pharmaceuticals for us to buy day in, day out. CH2 is a fascinating business, and it's actually 50% owned by the current CEO. He's grown that from 0 revenue in 2016 to over $3 billion in revenue as at now. And a lot of their successes come down to really managing working capital tightly and providing, probably the industry's lowest price, but they don't provide all the bells and whistles around their services as well. As a result of their significant share growth, they've been able to demonstrate significant operating leverage, and we believe the combination of the two will see further growth as a combined business, and also potentially upgraded revenue and cost synergies into the future. So we're bullish on Paragon Care and for the merged entity as well.
Fantastic. Sam, Will, thanks for your time and insights, and thank you for watching.